The RV business is having its worst year since the pandemic hangover. Shipments are down more than 14% through the middle of 2026, and not a single month has managed to beat the year before it. May alone fell almost 19%. The industry's own forecasters quietly walked their annual projection down below where it landed last year, and the retail picture underneath the shipments is uglier still. Actual purchases dropped by more than a fifth this spring. Everything is bleeding, except one thing. Motorhomes are selling better than they did a year ago, the only green number on an otherwise red board, and it isn't close. So let me deal with the title honestly before we go any further, because the numbers don't quite say what the headline implies, and I'd rather earn the next 10 minutes than lose you the moment you smell a sales pitch. Americans have not soured on motorhomes. If they had, the factories would be shipping fewer of them, and instead, they're shipping more. The people who can't move their coaches aren't the ones walking the lots this summer. They're the ones who already bought, often years ago, and are now discovering that a motorhome is far easier to fall in love with than it is to get rid of. It isn't the economy that's trapping them. It isn't rates, and it isn't diesel, though both get blamed in every comment section. What's actually happening was decided back at the factory, wired into the product itself, and it stays hidden for about 5 years before it comes due all at once, for a whole generation of owners who happen to buy around the same time. Give this a few minutes and the whole thing resolves into something almost mechanical. Why a motorhome ages in a way nothing else you own does, why the mileage on it barely matters, and why people end up selling long before they ever plan to. There's one number near the middle that does more explaining than all the rest combined, and when we reach it, everything before it clicks into place. Now, if you're serious about keeping your RV alive, I put together something called the 30-Year RV Bible. It covers all 47 maintenance habits with the exact intervals, the 11 places water gets into an RV, the 45-point inspection checklist for buying used, 22 dealer upsells decoded with the exact words to say back, and printable checklists you keep in the rig. Everything you need to know. The link is below this video. All right, let's keep going. It all rests on a single fact about how these things are built, so let's get that out of the way first. A motorhome isn't one vehicle. It's 2 of them fused into a single body, a rolling chassis and a house, and the trouble is that they don't age at anything like the same rate. Underneath sits the part that behaves like a normal vehicle. Engine, transmission, frame, brakes. Drop a diesel Cummins behind the rear axle of a Class A, and it'll run past 250,000 miles on nothing more exotic than regular service. A gas coach on a Ford chassis is good for 100 to 200,000. A Sprinter-based Class C often more than that. For someone who takes the thing out a few weeks a year, that's an engine you will not outlive. The house bolted on top is another animal entirely. Its roof is a membrane. Its walls are laminated panels. Its seals are rubber. Its guts are the same fridge and furnace and water heater you'd find in a cabin. And every one of those things runs on a clock that has nothing to do with how far you drive. That's the whole problem in a single line. The engine wears out by the mile, and the house wears out by the year. Sunlight cooks a roof membrane in a storage lot just as thoroughly as it does on the interstate. Sealant shrinks and splits on its own schedule. Rubber takes a set and stops sealing whether the coach ever leaves the yard. Appliances that never get switched on seize anyway, and tires expire on their date codes with the tread still deep. None of it cares whether you're using the thing. It degrades quietly, continuously, and mostly where you can't see it, which leaves you owning a drivetrain engineered to last decades welded to a living space with maybe 10 to 15 good years in it, and no way to divorce the two. You can't keep the strong half and sell the tired one. When the roof finally gives out, the barely broken-in engine beneath it heads to the same auction lane at the same moment for reasons that have nothing to do with the engine. This is also what turns the endless gas versus diesel debate into something more than a bar argument. Everyone frames it around power and ride quality. The part that actually costs you is the mismatch. Marry a 15-year house to a 300,000-mile diesel, and you've paid a fortune buying longevity for the one half of the machine that was never going to be the problem. The expensive engine outlasts the cheap roof by decades, and the roof was always the thing that decided when the coach retired. Here is the number I promised, the one that turns all of this from a design curiosity into a financial event. The typical Class A owner takes their motorhome out 27 days a year. Class C owners, a little less. And even though people are using their rigs more than they used to, the industry average still doesn't crack a full month on the road. Set that against a house aging every day of the calendar, and the ratio turns brutal. A couple of weeks of use against 11+ months of pure decay. The coach is falling apart almost constantly and being enjoyed almost never, which means the money you're losing to depreciation isn't buying you trips or miles or memories. It's buying you the passage of time, and time sends its bill whether the thing moves or not. That ratio is exactly why the money behaves the way it does. A motorhome hands back a fifth to a third of its value in the first 12 months alone. A $120,000 diesel is worth the low to mid-80s by its first birthday, even if it never left the driveway, and gas coaches bleed faster still, since they cost more to feed, and everyone shopping used would rather have diesel. Roll forward to year 5, and you're generally looking at something worth around 60 cents on the dollar. And the mileage you guarded so carefully barely enters into it. The valuation guides are blunt here. Age moves a motorhome's price far more than the odometer ever will. Pile on serious miles, and yes, you'll take a real hit. But keeping the miles low wins nothing back. It only lets you hold the ground that age hasn't already claimed. There is no saving a coach by leaving it parked, and leaving it parked is precisely what nearly everyone does. What makes this particular year so punishing is a bubble that's now coming due. The high-end coach market went vertical from 2020 through 2022, when buyers flush with pandemic cash poured into big diesels and dragged prices up behind them. That party is over. Coaches that cleared $250,000 at wholesale in 2021 are trading closer to $170,000 or $190,000 today. And the analysts who watch that corner say the floor hasn't even been located yet. The people absorbing those losses are, almost by definition, the ones who bought at the very top, which drops them squarely at the 5-year mark, the exact moment the house starts mailing invoices. And the meter never idles while that happens. Financing, insurance, fuel at single-digit miles per gallon, storage, campgrounds, upkeep, depreciation. Stack it all up, and a big diesel can quietly cost 6 figures a year just to sit there being owned. Now for the piece almost nobody lays next to the money because it doesn't appear on any spec sheet. Look at who owns these things. 2 out of 3 Class A owners are past 55. Something like 4 in 10 are retired. The overwhelming majority have no children left at home. This is, top to bottom, an older crowd, and the house they own makes demands that have nothing to do with their bank accounts. Somebody has to climb a 14-foot roof twice a year to inspect and reseal it. Somebody has to crawl underneath and eyeball the tanks and the seals. Somebody has to steer 40 feet of vehicle down a highway, thread it backward into a campsite between 2 trees, and mind a car dragging along behind the whole way. Those are physical requirements, not financial ones, and unlike a balance sheet, physical capability comes with an expiration date that nobody gets to negotiate. That's the part that sneaks up on people. You can be entirely comfortable, retired, coach paid off, money a non-issue, and still reach the season where the roof simply doesn't get climbed anymore. The day that inspection quietly stops is the day a house that was already aging on its own begins collecting neglect on top of age. Water finds the walls. Water finds the floor. That's the failure that ends coaches, and it starts with a ladder that stopped getting used. So the great sell-off isn't really a story about hardship. It's a story about timing. A wave of people bought between 2020 and 2022, most of them on the far side of middle age, and they're all arriving at year 5 or 6 together, the same stretch where the house wants real money, where the value has already fallen by nearly half, and where the owner is simply older and warier of ladders than the person who signed the paperwork ever was. Those pressures don't show up politely, one at a time. They land together, on schedule, for almost everyone in the group, which is why it reads as a wave rather than a scatter of unrelated decisions. There's no villain in it anywhere. It's a calendar. Getting out, meanwhile, turns out to be harder than it should be, no matter which exit you try. Sell it yourself, and you run into a market that's simply thin. A used trailer needs a buyer with a truck, but a used motorhome needs a buyer willing to climb behind the wheel of a bus, and there are far fewer of those. Even the professionals feel it. Big coaches sit on dealer lots dramatically longer than trailers do, long enough that the industry treats 90 days as a warning sign and 180 as an emergency, with some units aging past 5 months before they finally move. If a dealer with a showroom and a finance office needs half a year, the owner with a phone snapshot and a marketplace post should set expectations accordingly. Trade it or consign it instead, and you run into the appraiser, who isn't looking at your engine at all. He's looking at the house, the roof, the seals, the sidewalls, whether the floor flexes underfoot, whether the slides still glide in and out. That gorgeous low-mileage Cummins is nearly beside the point. The offer you get is set by the exact components that have been quietly aging the entire time you owned the thing. And the option most people actually reach for, keeping it and simply not using it, is somehow the worst of the lot. The insurance, the registration, the storage, the depreciation all keep running full tilt, while the enjoyment drops to nothing. A coach that never turns a wheel is still hemorrhaging money and still getting older by the day. That's the limbo people tend to sit in for a year or two right before they finally give up and sell. None of this is a scheme, for what it's worth. It's just what falls out when everyone in the chain optimizes for the thing directly in front of them. The manufacturer has no earthly reason to build a house that lasts as long as the chassis under it. Doing so would price the coach right out of the showroom, and the customer wandering the aisles at the RV show is weighing floor plans and finishes anyway, not membrane warranties. So the house gets built to a price, and the price quietly assumes it won't last. The lender needs the payment on a $250,000 purchase to feel survivable. And the way you manage that is by stretching the loan toward 15 or 20 years, which routinely engineers a note that outlives the very thing securing it. The house can be worn out, and the borrower can still owe on it. And the dealer earns nothing on a customer who buys once and keeps it for 2 decades. The real money is in the one who circles back around year 6, underwater and restless, ready to roll the shortfall into something bigger and start the whole clock over. Nobody in that story is lying to anyone. Each is just playing their own hand well. Add it all together, and you get an entirely predictable result. An owner, 6 years deep, holding a coach worth a fraction of what they paid, staring at a roof that needs work and a ladder that's lost its charm. So what do you actually do with all this? If the coach is already yours, treat time as the enemy and take the counterintuitive lesson to heart. Use it more, not less. The depreciation is happening regardless. Parking it doesn't slow the bleed. It only guarantees you got nothing in return. The single way to convert that loss into something worth having is to go somewhere. And whatever else you do, do not let the roof slide. A yearly reseal is the highest return hour of maintenance on the entire machine, because it's the one thing standing between you and the water intrusion that quietly destroys these coaches. Damage that runs well into 5 figures, and that insurers love to file under maintenance, meaning the bill lands on you. If you're the one shopping, this whole grim picture is quietly your opening. The coach that's already 6 or 8 years old, with a single careful owner and a real paper trail, has taken the ugliest stretch of the depreciation curve on your behalf, while the engine underneath has barely started its life. That's the strongest value in the market right now, and the very forces we've been tracing mean there's an unusual amount of it out there, offered up by people who need out. Just be honest with yourself about the part nobody plans for. Everyone runs the math on the payment. Almost no one runs the math on the ladder, the driving, the backing in, and those are the things that quietly decide how long you'll actually keep it. The financing was always the easy part. The physical part is what's sitting behind every number in this video. Which lands us right back where we began, with 2 facts that only look like a contradiction. Motorhomes are outselling everything in a market that's coming apart, because the people buying them can write a check and skip the lender entirely, and motorhome owners are heading for the exits at the very same moment, for reasons that have almost nothing to do with money, because the thing ages on a calendar, gets used a few weeks a year, and asks its owner to keep climbing a ladder that seems to grow a little taller every birthday. The buyers and the sellers aren't arguing with each other. They're just standing at opposite ends of the same calendar.